Hi everyone, and welcome to this Sunday special with just myself. Unfortunately, Imre's not around. I wasn't going to drag him on a Sunday afternoon. I've decided that hey, I think it's worth sharing this with everyone. I wanted to do a session on Friday, but we just didn't have enough time. There was so much to talk about, so many things that were happening throughout the week, and I've been thinking, over the last couple of days in terms of what's really happening with the market right now, with gold prices, with everything that's been happening around the world, and I just wanted to share a few things and give my insight. Yeah, though take it only as educational purposes. Please do your own research. Obviously, this content is just for informational, entertainment purposes only. Yeah, I'm not an expert. I don't hold any qualifications in terms of a trader or hedge fund manager or anything like that Imre has. But yeah, I do like researching and do like looking at patterns and seeing patterns on the market and yeah, finding out about the world. And I think what's happening right now is something that we might not see for the next 20, 30, 40 years. So listen, let's get straight into it. So what I've essentially done on this chart here is really wanted to talk about how great of a run gold has had. I said 130, apologies, it's 120%. 120% uh, since March 24. So I thought it was 2 3 years, but it's actually just been over a year. 1 year and 6 months also. Just if I look at the chart very quickly, I mean, with the breakout happened, yeah, let's call it in March. Yeah, so just under 2 years, we had 120% growth in gold. Gold overtaking euro as the second largest currency in the world, which is absolutely mind blowing to me. I didn't think it was going to happen so soon. Honestly, I didn't think it was going to happen for the next couple of years. But given what's happening around the world and the weaponization of the dollar, I believe that we are currently at a stage right now where I think central banks are looking for alternative currencies, alternative safe havens to US dollar. There's been a lot of detractors from the currency itself, whether that's through tariffs, sanctions, wars, um, you name it. And you can blame it on Trump, you can blame it on Biden, you can blame on everyone else involved, right? But it was going to happen sooner or later. I think countries do want to be sovereign and want to be independent, and they don't want to rely on another country, especially a country that's printing out dollars on demand through Fed, and essentially just flooding the market with worthless paper, essentially. Now, obviously, you can think of the Fed however you want it, right? Some people say, oh, the Fed's great, it's the only bastion of stabilization, the only bastion of non-politic involvement. I don't believe that's true. I think Fed has been politicized ever since the early 2000s. It's been controlled by whoever was the president and whoever was the winning party, purely because of the fact that of the nominations, how the nominations function within the U.S. government. It's the same story, right? The next administration, whoever that is, will want to have the Fed that's how can I put it? Not manipulated, but persuaded. Yeah, more easily persuaded by the ruling government and the ruling president. Now, obviously, Trump is how he is. He likes to talk a lot, but obviously in behind the scenes, right? If you Biden or whatever, Biden was more subtle, but he was doing exactly the same thing what Trump's doing, but Trump is more vocal about it, and he likes a little bit of the limelight. Hence why we see all those tweets about Powell, and I think he's insulted him in every single way possible without cursing, which is a feat of itself. But yeah, for me, what I've seen, on gold is a very very worrying sign, right? Gold usually gains on a few factors. And I like to think we pretty much hit all the factors that gold usually rises on. It rises on US dollar weakness, which, if we look at the DXY, which is the basket of currencies versus the US dollar, um, ever since sort of end of 2022, it's been on a very relative decline, really. I think it's dropped over 10%, I believe, or potentially more than that. Let's have a look. Yeah, 15%, which has been absolutely crazy. Obviously, it doesn't match whatever gold's done, but that's for a specific reason. So obviously, currency devaluation is one thing. The reason why gold goes up. Two is uncertainty on the market. So whenever everything's fine and dandy, you look at ISM numbers that are great, NFP numbers that are great, inflation is at 1.7%, 1.8%, interest rates are low, we're potentially looking at more cuts. Then when the economy is great, people want to invest in assets that will grow much faster than gold, right? Usually gold rose at 10-20% a year, maybe. But as I said, for over 11 to 12 years, gold was essentially in a range, just underneath $2,000. I mean, if you look at where it first formed it, 1,900. It firms formed it in July 2011, and it didn't break out all the way to 2024. Over 13 years in that range, right? And for the most part, between 2013 and 2020, pretty much, it was within what $200-300 range, which is obviously insane in terms of what's happening right now with gold. I even mapped out like levels. I was thinking, do you know what? There's no way. There's no way it's going to break 3,600. We might see a retracement back to 2,000 or 2,700 or maybe 3,000 again before we go on the run. And same for 3,700, 3,800, and I was just like, okay, I give up. I think, at that point I was like, okay, gold is going up to 5,000. There's no stopping it. Now for short term, long term, medium term, I literally don't know. It's impossible to predict right now. But that uncertainty essentially is another catalyst for gold. Lowering interest rates again, that's another positive for gold as well. And then obviously the sort of negatives that are sort of positive for gold as well, which is again a very, very strange dynamic, and why gold is such a unique instrument compared to everything else that's out there, because it can be boosted by positive news and positive catalyst and negative catalyst for the market, but positive catalyst for gold, right? And we had multiple wars, right? Ukraine, Russia. We had Pakistan, India. We had Israel and Gaza. We've had Azerbaijan and Armenia, and so many more that I could just keep on listing at this point. But we have all those wars, and not all of them have been solved. And every single time, there's been war. Obviously, there's been more money printing to help other countries that are in need. Some for better or worse, obviously depending on your worldview. But whether that's print out more money to give to countries for aid, or to rebuild, or to provide missiles and defense systems, all of that is inflationary. And gold grows on inflation, especially when there's no growth. So as the money's being printed and sent out overseas, right, it's not being pumped into the economy. So it's not like the consumers are spending, and the economy keeps growing that way. The money's sent overseas, and what that essentially means that there's a plug that needs to be filled, right? And whether that's through an increase of inflation, whether that's doing cuts to the government, which there haven't been many, to be fair, and we'll get into that in a little bit in a sec. But that's essentially where we are, right now. you know, gold's hit, nearly 4,400 last week, and stabilized at about 4,250, and pretty much going up in $100 clips, which again, it's kind of grown essentially like a meme stock. But one of the key things that I think people are starting to pay attention to, which I really wanted to discuss in this video, is the US national debt, right? This is what we call the US debt clock. If anyone wants the website, I'll be more than happy to share it. But essentially, the US national debt is nearly $38 trillion, $110,000 per citizen. The average salary in the US is about 42,000. If someone was literally going to just pay the debt and nothing else, it would take them 3 years. On average, it's been worked out, and I just need to remember where I got the statistic from. I'll share it later, but I think I saw a statistic that on average, US citizen, it would take them about 15 years to pay off their debt. If they didn't do traveling, if they lived on, in a frugal way, they weren't overspending, they weren't using any credit cards, they were just, paying off the debt, whether that's mortgage, whether that's car payments, whether that's, mobile phones or whatever else, right? Just that will take them 10 to 15 years, with 15 years being sort of the consensus that a lot of people have been agreeing to. And where the majority of the debt lies is with the Gen Z and Boomer generation. So anywhere between sort of ages 30 or 28, 29 to about 50. And for the young folk, under 35, it's still possible to get out of the debt, but people that are over the age of 50 and 55, with everything that's happening, right? So inflation, costs, the cost rising of produce, goods, services, everything's going up. I don't think they're going to pay off the debt. And what will happen is essentially that will get passed on to other people, spouses, the family members, or it would have to get written off, right? And what's going to happen when that debt's written off? Yeah, that's where we have to, start worrying a little bit. So that's number one, and I think that's another reason why gold's been going up. But we'll get into another reason why gold's been going up in a second too. But then we look at the US federal budget deficit, right? It's at $1.762 trillion, which is, absolutely insane. So, the US federal tax revenue, they bring on about 5.2 trillion overall, right? 7 trillion in US federal spending, which I think of trillions, and it feels to me like it's some absolute magic. 99.9% of us never seen $1 billion or $1 million in our lifetimes, and we probably never will, right? So trillions, right? The number's literally unimaginable, and it's getting to the point where the US debt costs more than defense, education, and transportation put all together, right? Which is absolutely insane. It's actually mind blowing. But one of the key things that I sort of wanted to focus on as well, and again, why I believe gold is picking up in terms of institutional buying, is this: Social Security in the US. Now, I could probably talk about 30 minutes how the Social Security and public pensions are a scam, and shouldn't exist. And for those people who are paying right now, like I am as well. As I said, I'm just turned 30. I'm paying for public pension even though I shouldn't, because I don't think we're going to have a public pension in 40, 50 years, because there isn't enough money out there, right? Essentially, we are paying for the generation that's retiring right now, or is retired, or has been retired for the last 10, 15 years, because they have definitely not paid enough of taxes in order to cover the social security, right? Because again, inflation, the money printing that's been happening over the last 15 years. There's just no way they've paid enough in taxes and paid enough in social security to live off it. There's just no way, right? So yeah, $1.588 trillion is spent on social security, and in some estimations, people believe that it will take over the budget deficit, and it will be the highest marker, and it will take the US debt interest as well. So US debt interest, social security, and those are probably the two factors that are sort of a plague on the US's future, essentially, because I don't believe, especially a big beautiful bill, that's going to introduce another $3.5 trillion in spending. I don't think there's going to be an end to it unless something terrible happens and US defaults on its debt, and we may be in so much trouble because of it. But that's something to think about. And then very very quickly, in terms of US federal debt to GDP ratio, 120%. Yeah, guess what happened in 1980? We had inflation at 11%, and we had essentially a currency crisis and a financial crisis in a way. In the 2000 era, again, we had another relatively small financial crisis, but that was just due to terrible mortgage loans that were given to absolutely everyone and anyone. And yeah, the whole Ponzi market collapse in that area. Now I think the overall spending and overall money borrowing is much more complex and much more layered. It's not just mortgages, it's subprime loans through regional banks, which obviously we've discussed on Friday, and why they're taking such a hit. First Brands is just a domino that's kicked off an effect. I believe we're going to see essentially a much bigger blowout that we've seen in 2023 when Silicon Valley Bank went bust because there was a run on the bank essentially. So in 2023 the banks didn't essentially go bankrupt they didn't have the money, right? They just weren't liquid, and that's partially due to fractional banking, which again, very quickly, just to run. So whenever you deposit your money into a bank, the bank doesn't hold 100% of it. It holds about 10 or 15%, depends on the bank. They learn out the rest, they buy bonds, and essentially that's how they make the money. And then obviously then they borrow the money to other banks, other financial institutions, businesses, so on and so forth. And then obviously that's how they make the money. So essentially, if there was a massive run on the bank, right, especially on the regionals, let's just say Zion was targeted. I think Zion took like a 13% hit, and Zion was targeted, and everyone wanted to pull money out of Zion. Essentially, Zion will have to close doors because they won't have enough money to cover everyone. Everyone withdraws. So then what they would have to do, they would have to sell the bonds, try and get money back from other banks. And that will cause a cascade, because then, whoever Zion borrowed money to, another bank, and that other bank will go, well, we don't have that money because we lent it to another bank, and we can't give you the money right now, we can just pay you the payments. And essentially, one bank that had sort of a run on its money turns into 10, 12, 13 banks. And essentially what happened was in 2023, FDIC had to come in and step in and save those banks, and obviously JP Morgan and another Goldman Sachs and other banks, essentially had to buy out Silicon Valley Bank's debt and other banks' debts, essentially to save the market, because at that point it was going to get really, really scary. But now we are in a situation where FDIC is no longer will be able to step in because of lack of available liquidity, and the money that they have, they essentially run out. So they aren't able to just go in and say, oh, we're just going to buy the debt, or we're just going to help out the larger banks by giving them the money so they can buy the debt. It won't happen anymore. So this time, if there is a run on the bank, yeah, it will be a potential disaster. And, regional banks are sort of like a canary on the mine on the market, right? If regionals fall, that means the bad debt the bad debt that's essentially, not holding the market, but what's showing that the market's growing, that the economy's growing. The bad market turns into a very, very no, the bad debt turns into a very, very sour debt, and essentially it's not going to get paid, right? And then that bad debt essentially then gets pushed into, large institutions that they'll have to eat it up. And how they're going to eat it up is by asking, the Fed to print out more money, to, lower the interest rates, and basically, throw the Hail Mary in order to, save the economy from essentially collapsing. And I think that's again another catalyst to potentially why gold has had, such a rise. And another catalyst I want to very quickly talk about is China. Yeah, China has been a net buyer since Q3 of 2022, really. Probably a little bit sooner than that. I think after COVID, what happened, and then we had the Russian-Ukraine war, and what happened with that. The moment that sanctions were hit on Russia, and that was, targeting financial institutions, banks, energy facilities, seizing $300 billion worth of Russia's funds. China got a little bit scared because obviously, I wouldn't call, China a very, very close ally to Russia. They were more made allies due to the circumstances that, the West, doesn't want to be an ally with China, and they always think that Russia's the enemy, so on and so forth. So those two countries essentially married each other because they had to. It's sort of like I call it an arranged marriage, essentially. But yeah, ever since then, China was seeing how how the US was essentially, thinking about, ways to cripple Russia, and the only way that they could do it is through, sanctions, and same for the EU, right? So one of the key things that, China started doing is slowly but surely start to dump US dollars back to offshore markets, and start buying their own currency, and also buying gold. And yeah, ever since, as I said, Q3 2022 has just been on an insane rise. And although you can't really see it in terms of here, right, in terms of, you look at the bar chart, and yeah, it's going up, but it's not like, wow, there's so much buying. Look at the inflows that we've had recently. This is not just China talking, but in terms of inflows overall, that we've had on gold and silver funds. I've never seen anything like it. Again, for any information, follow ZeroHedge. He's absolutely brilliant at providing news on the go. Really, really insane. But yeah, that just, shows that institutions are really, really starting to buy the precious metals because of the factors I just explained, a couple of minutes ago. I think right now, with what's happening around the world, even more, US even, uh, attacked Iran, which again, they're depending on which side of the aisle you are. Some people are happy that they attacked Iran, some people don't. But that, whether people think, oh, it's not impacting me, whether it's in the Middle East, blah blah blah, it does, because every single factor where the US trying to reassert its dominance through, some people call it strength, some people call it through bullying. But essentially, other countries are taking notice, and they're thinking, right, we want to be sovereign. We do not want to be dependent on the US dollar. We also want to be a power within the world, right? And because of this world order, globalist view is changing, and we start seeing more, nationalism, more independence, as I say, more push towards sovereignty and towards having, your own borders, and so on and so forth. One of the key things that, people go back into in terms of, buying alternatives, what can you buy, right? And yes, you can buy Bitcoin, right? So, one Bitcoin is, $108,000 right now. Do you want to buy that? And then at that point, a lot of the countries are starting to think, about type of warfare that's going to happen. And yes, that it might come to a physical altercation. But a lot of the warfare that will be happening and is happening behind the scenes, right? I'm sure there's cyber attacks happening from China to the US and US to China. There's no denying that for sure. So then, what's going to be safe for the countries, right? If they're going to buy things, okay, we'll buy Bitcoin and we'll keep it on the ledger. Let's say there's social engineering happens. It happened before, it happened with massive businesses, happened with banks, and and especially with crypto, with the Lazarus Group that's based in North Korea, that's funded by Russia, that's funded by if we get into conspiracy theories, but for example, Lazarus Group stole over $50 billion worth of Bitcoin and Ethereum, and Lord knows what else they stole. But with gold, right, a lot of the gold is kept in physical vaults, and those vaults are kept in archaic technology for a reason, because it can't be hacked. The only way they could steal gold is through invading the country. So what will probably happen, seeing the buying in gold has been so astronomical, especially from China and other countries, even the US are buying on net positive and net bullish on gold, is they probably will introduce some form of token. Now, when that token will happen, I don't know, but it'll be probably pegging. They'll try to peg gold to. I doubt they'll try and peg it to US dollar, or they'll try and peg it to yuan, because people are losing faith in the current system. So I don't know what they're thinking about doing. Maybe they'll try and peg it to their own currencies. Who knows? But that kind of buying of gold isn't for jewelry or for building equipment or anything like that. It's safe haven storage. And yeah, I believe they're really preparing for something. Otherwise they'll just put money in stocks, put money in funds, put money in bonds, put money in treasuries, anything but gold. Because when you buy physical gold, it's not liquid, right? It's not like you can purchase 100 stocks of Nvidia and then sell it sell it within minutes. It's more complicated than that. All right, when you buy physical gold, then you have to buy a buyer, and then obviously you have to auction it, you have to ship it, so on and so forth. So there's a lot of logistics that's happening. So yeah, the only reason why they would store the original the original money, as a lot of people like to call it, is because of that. So yeah, hopefully that gives you a little bit of an insight in terms of gold and what's happening with US national debt. If you'd like to learn more, please reach out to me on X or YouTube. I'd be more than happy to talk about absolutely any of the topics. And also I'll try and bring on guests as well to do those specials. I don't know how often those specials will happen. Hopefully every week, or every 2 weeks, whenever something big to discuss, or there's a massive update that needs to be done that was uncovered in my chat with Imre, then yeah, something that I'll consider doing. But yeah, for now, thank you so much for your time. Enjoy the rest of your Sunday, and see you later.